A wonderful good afternoon, good morning, good day, wherever you are. What a nice pleasure to have you here in this webinar this afternoon. We are going to talk about your risk appetite and your own personal trading strategy. And I'm feeling such a good pleasure that you have time for me this afternoon. Okay, including the following topics we want to talk about this afternoon: an overview of the different levels of risk tolerance in trading and how different levels of risk appetite align with different trading styles and money management styles, and your personal risk tolerance and your trading strategy. My name is Marcus Gabel. I'm a professional analyst, speaker, trading and life coach. And of course, I love to trade with real money, of course. And I've been trading since more than 22 years right now. And if you want to have more information, just have a look at my homepage. It's at the moment the German one, but the English one will publish till end of this week, I guess. I'm almost done with it. In this webinar, Trading Spotlight, and this webinar series, Trading Spotlight, I'm partnering with Admiral Markets, which is a Forex and CFD broker that offers trading over 8,000 different financial instruments through one of the world's best trading platforms, MetaTrader 5. Finally, if you watch this on YouTube, remember to like this video, share it with other traders, and subscribe so you will never miss an episode. And please make sure that you stay until the end of this webinar or the end of the video if you watch it on YouTube, because when I'll be showing you the importance of assigning a maximum percentage to your risk is overestimated because the amount beyond the percentage is so much more important. So I hope you have a little bit time for me this afternoon. And now we are done with the introduction. Welcome, welcome. It's Marcus time this afternoon. It's Wednesday afternoon. And Martin, Delius, Ronald, Plamen, hello. Nice to meet you here again. Please feel free to ask whatever you want because the chat is open. I can see it on the right side of my screen. I have 4 screens here, and the right side is my, I can see the chat or your questions. And it would be a pleasure to answer your question if they will fit to the topic of this afternoon. First of all, I hope you're doing good about the corona pandemic around the world. You're still healthy, your beloved ones as well. This is so much more important than every other things. You're healthy, your mental fitness, and your family, your friends are so much more important than the red and green candles, because this is my mission and my personal attitude, because you are at the human part, you are in my focus, because you are at the human part is so much more important than the trader, because the human has to be proper working. And if you failed as a human, you cannot be successful as a trader. So that's the point why we talk about, but I used to talk about the human part in trading. And today, of course, risk money management and the risk, a proper risk management is a part of your own humanity. And this is really, really important and interesting. And this is my part today to talk about that. So if you have any questions, let me know. What is risk management? It's a process. And this process used to mitigate or protect your personal trading account from the danger of losing your entire account balance. So, you know, it makes no sense to make a trade and you cannot control it. And after the trade, or maybe after 1, 2, 3 trades, your account is empty. You don't have any you don't have any money to trade anymore. And this is stupid. This is really, really stupid. And this is not the sense or the deeper sense and the deeper cause of trading. So the target must be that you always are in the situation that you can make your trades. Without money, you cannot make trading anymore. Let me tell you a short story. Actually, I have a coaching client, and he came to me 2 weeks ago with his own story, and he told me he was trading for half a year, and he was able to double his account from 20,000 up to 40,000. He has special ideas after 3 months, and I asked him, okay, that's beautiful, but what's about risk management? Okay, if you can double your account in 3 months, there cannot be any kind of risk management. And he said, no, it was always all in. Oh, okay, great. So what's your problem right now? Okay, I have a problem. I lose my inner center. I lose my complete inner freedom because I ask you, what's happened with you? Yes, he was able to double his account, and then he was listening to a friend, and a friend of his, this guy, told him there is a huge opportunity. You should buy a special share. You can double your account again. And he went all in again. And at the end, it crashed. It crashed. And he lost at the end 31,000 euros. So at the end, he had less money when at the moment when he started. So this is not senseless. This is not sensible to trade. This is stupid. This is really stupid. And if you don't understand how the market works, and if you don't understand what's happened there, you're completely out of yourself. You're completely out of your comfort zone. And this is the point why so many people fail. Look at this slide on the bottom. You can see trade responsibility. 79 of retail investors account lose money when they trade with our broker Admiral Markets. Now 70-90% during the last 3 months. This is not acceptable for me. And it's not necessary that you lose your money. It's not necessary. If you follow Jens, Paul, and me and our trading ideas, you will be successful on a long run. Not on the short run, not in today or tomorrow, but in the long run. And one of the most important parts of that is your risk management. It should protect your money. So risk is the likelihood that a loss will occur. Of course, it's absolutely, it's a kind of probability, and losses are a part of your trading style. Losses are always a part of your trading strategy. You can never have 100% strategy. It doesn't work. If there exists a 100% strategy, we cannot trade anymore, because one guy found it and has all money, of course. So think it through. You will see I'm right. Because if you manage risk well, you have the potential to consistently make money in the Forex market. It's not a kind of your strategy. It's not. The main topic is risk management. And I created a webinar. You will find it in a list on YouTube on Admiral Markets, when I talked about the most famous Forex traders in the world. It was George Soros, Bill Lipschutz, and Stanley Druckenmiller. And all of these 3 guys were agree, because all of that 3 guys said, first of all, you have to protect your money. First of all, you have to be a famous and absolutely professional risk manager. Before you think about your profits, protect your money. Think about it a little bit. Generally, proper risk and money management should protect your complete investment. This is the sense of any kind of risk management. Let's go really far away to the history right now, I want to introduce you to a military general, a Chinese military general. His name was Sun Tzu, and he was really famous. And he said, every battle is won before it is fought. And this phrase implies that planning and strategy, not the battle, win the war. Again, every battle is won before it is fought. Your plan and your strategy will win every war and not the battle of itself. In trading, we can do the same. Similarly, successful traders commonly quote the phrase, plan the trade and then trade the plan. So most of the guys don't have any problems with having a plan. Of course, too many guys don't have a plan when they come to trading, but this is another webinar, of course. But most of the guys, you see, 79% failed in trading. It's not about having no plan. It's about sticking to the plan. That's the problem. And why is it a problem? It's about risk management, not about the plan. So now think about it. If you know me a little bit, and if you follow my webinars in the past, you know, I always used to say trading is mostly a human part. Trading is deeply kind of humanity. The trading success is based on 10% strategy, but 90% humanity. It's a human part. You see, almost 80% fail in trading. Not only at my markets, it's all of the other brokers as well. That's not the problem. So I cannot say all these guys, 80% of all traders are stupid or too stupid to stick to the rules or to not having a plan. What's the problem? It's the lack of risk management. And it's a big lack of the human part to stick to your rules on the right side of the chart. You know, you are on the right side of the chart always. And sticking to the rules, it's not depending on a strategy. It's the human part. And this is the big point. This is the real big deal why so many people fail in trading. So just like in war, planning ahead can often mean the difference between success and failure. Planning ahead, not while the trade is open or not during your trading. Having a plan ahead is the big difference between success and failure. And not sometimes, always, really always. So unfortunately, unsuccessful traders often enter a trade without having any idea of the points at which they will sell at a profit or loss. In my experience, and you know, I'm so grateful that I can support so many people in trading. And so at the moment, I guess more than 100 ladies and gentlemen, I was able to make successful in trading. But I figured out, based on my own experience during the last 20 years, it's not the problem to learn a strategy. And it's not the problem to draw a trend or can see where my signals come up and something else. Most of the times, most traders have a problem when the trade is running. And not even if the trade is going into the loss, because most of the people, most of the traders are used to having losses. But they are going to get crazy if the trade is going into the profit. Then they're going to sweating and get wet hands and something else. Oh my God, what should I do? I have a profit. My trade is going into the profit. Oh God, what should I do right now? Should I trail my stop, or should I get the money from the desk or something else? If you would have a plan, there wouldn't be any reason to get nervous in trading. But most of the time, most traders don't have a plan if the trade once is running. That's the point. And then as a result, emotions begin to take over and dictate your trades. Let me ask you, would you be agree with that words I try to explain you? Oh, thanks, Plumman. Plumman, my friend Plumman here is a famous, a really awesome student. I teach him right now since a couple of months, and he learned a lot with me, and we are a great trading couple, and he's amazing. He learned a lot, and I'm looking forward to have common results and success with him. And Anthony, thank you. He's agree with me totally. I know that. I'm feeling angry if I lose money, but I'm feeling completely confused in the past, not today anymore. In the past, I felt really confusing once my trade is going into the profit. What should I do right now? Today, no more. Today I have a plan, always. And this is my message. The plan is close to position when it's profiting. Yes, that's the theory. That's the theory. But the practice is a little bit different. Now let's talk about different levels of risk tolerance. And of course, thank you for, I don't know, who is my host today of Admiral Markets? Who is beyond the scenes right now today? Chichi, hi, nice to meet you here again. The plan is to close the position when it's profiting. Yes, but when is? When is the time to close? Profit is one point, but when? That's the big question. Sometimes I realize sometimes I close the position too early, and sometimes I close it too late. That's the point. And so the big question, having a plan is the best point to close my trade when my target is really reached. That's the point. So I've been using a live account since the beginning of the lockdown, and my emotions are completely destroyed. Anthony, thanks. I love you. I love you, guy, because I know that as well in the past. Believe me, I lost so many mouses when I throw that to the wall in my trading career, because I was completely confused. Trading is able to bring you completely out of your comfort zone. It's only just, damn it, red and green candles, but they can bring you completely out of yourself. Therefore, we talk about risk management. And a lot of traders follow what's called the 1% rule. Did you ever heard that? The 1% rule. Basically, this rule of thumb suggests that you should never put more than 1% of your capital or your trading account into a signal trade. I give you a small advice. That's bullshit. It's stupid. But let's talk about a little bit later about that. For example, if you have $10,000 in your account, for example, your positions and in every given instrument shouldn't be more than $100. That's the theory. This strategy is common for traders who have accounts of less than 100,000 euros or dollars. Some even go as high as 2% if they can afford it. That's the point. If you can afford it. Listen to that. With higher balances, you may choose to go with an even lower percentage. So maybe some guys, if you know that I'm a trader in an asset management, it's called Born, Stahlberg and Partner. We have offices in Switzerland, in Germany, and in Tokyo. And here on my right side, there is the computer, and there is the risk manager. There's the asset management computer. So, and I'm really grateful that I can manage a little bit bigger accounts of my customers. So, and most of my customers or my clients says, please never risk more than 0.5%, 0.5, 0.5%. Because you see, the higher the amount, the less or the more less the risk. That's normal in a way. If you have less money on your account, you can risk a little bit more, but this is not the big number. That's the big deal. The best way to keep your losses in check is to keep your risk below 2% anymore, and you will be risking a substantial amount of your trading account, which means it can easily get out of hand when trading with high levels of leverage. Never forget, you work with a leverage. Okay, in Germany or in Europe, it's limited by the ESMA. If you have an account in Australia or somewhere else, that can have you can have a leverage, but 1 to 500 or 1 to 300. It's nice, it's beautiful if you have profits, but it's destroying if you have losses, because this leverage works in both directions. Never forget that. So be careful with your risk. Different trading styles require different risk levels or tolerances. And maybe you know we have, most of the times, we have 3 different trading styles. We have scalping, we have day trading, and we have swing trading, or a little kind of investment. So let's talk about the scalper. As a scalper, you need to cut just some pips or points out of the given instruments or market, maybe DAX or Dow, S&P, and you decide to spend less time in your preferred instrument. If you work with futures or Forex or CFDs, for example, and this means your risk is also lower with less time in the market and a stop loss that is very close to your entry. The result, because the gains per trade are very small, you might risk more than 2% to make those gains larger. This is what a scalper most of the times is doing. He is very less time included in the market. He has a very close stop loss, but the target is also very close. This is the point why most of the scalpers are increase the risk more than 1, 2, 3, 5%, because they have the risk very less time in the market. So in, out, and away. So make your profit. Maybe they have enough. They are satisfied with 2 points, 3 points, 4 points, or maybe 1 pip or 2, 3, 5 pips, but they have a huge risk in the market, but very less time. This is, in technical term, is called the risk is in money. It's money risk. The other point, the opposite, is risk in the market. And this is a kind of day trading or maybe swing trading. But as a scalper, you have risk in money because you have an increasing risked money, and then you have closing targets. The other one, as a day trader, you spend more time in your preferred asset and you want to gain more pips. Maybe you spend your time in market for 10 minutes or maybe 1 hour, 2 hours, 3 hours. So, or maybe like me, sometimes I'm engaged in trading. No, I don't make day trades. I am a swinger trader. I've forgotten. I'm a swing trader. As a day trader, maybe you are included in, you have your money in the market for maybe 1 hour or 10 minutes, 50 minutes, 30 minutes, something else. And you need more gains, more pips, points, or dollars from the markets, which means the risk is in the market. Scalper, risk in money, huge risk, less points. Day trader, risk in market, more time, less pips. So, and but for that, you need more time to get the same result, which means the risk is in the money, is in the market, which means you need more time. Your stop loss is also farther away from your entry. The result, you may choose to risk less than 2%, maybe 1%, because you have your money, more time in the market, which means the risk is taking place or is lasting more time in the market. If you are a swing trader, so like me, then, and I love to make swing trades, it's completely calm, it's so easy, and it's really satisfying, and it lets you be in your inner center. And if you are a swing trader, then you keep trades open for several hours or days or even longer, meaning you spend much more time in your traded asset. Your stop loss is far away from your entry because you speculate on a possible new trend, which means necessary corrections are a part of a trend. And this is the hard point in trading, because sometimes you are in profit and then you want to make a trend, you want to let the trend running in your direction, maybe up to the point of control, whatever. But corrections are a part of the game. And you are living on the right side of the chart. And if you have too much money in the market, you live with any damaged trade, with every damaged candle. If you have green candles, if you have a long trade open, then you're happy. And if you're far away in the profit, you're happy. But sometimes, and most of the times, it's a part of the trend. A correction must come, and then there come the red candles, and you look at your profit and say, oh my God, it's going down, it's going down, it's going down, oh my God, oh damn it. So this is the life of a trader if you cannot control your risk. Believe me, I made it in the past. I made this experience so often. Sometimes I was crying. Sometimes I was so angry with my trading style, because to be honest, I didn't have any trading style. I had an idiotic, I was an idiot. I didn't have any kind of trading style. I thought if I have a green candle, I go long, and if I have a red candle, I go short. At the end, I was done. After one trading day, I was completely done. I was shouting to my previous girlfriend at the time, and she left me, and she never came back. Believe me, it's not funny. That's not the funny part of my life. It was the deepest point in my trading career, and it's not really funny. Today, yes, it's 10 years ago. Today I can talk about really easily about that. But at that time, it was hard time for me. And to be honest, I lost everything. I didn't have any kind of trading style. I didn't have any idea or clue about risk management. I only was focused on damn it money. I wanted to make money. And that was the point in my trading career. And if I look out of this window here on my left side, there is I can look at the Danube. It's the big river here in Bavaria. And it's more than 10 years ago. I wanted to finish my life. I lost everything. I lost my money. I lost my self-confidence. I lost my family. I lost everything. And for a guy, it's destroying, completely destroying. When you lose your self-confidence, when your ego is broken. And then I drove to the river and I wanted to finish my life. One step. Thanks God, I didn't do it at that time. But I want to tell you that you can realize what is trading able to do with you if you don't have a real and clear risk management. So that's the point why I talk to you in that way. And there are a lot of funny stories, but this was the deep point, the deepest point in my trading life. And I'm talking about that you will never make the same experience. There is a big difference between your theoretical risk tolerance at a certain percent and your personal money management. And now we are going to come to the most important point. Why? At this point, we need to talk about the human factor. Yes, again. Maybe you think it's boring, but it's the crucial point in your trading. And maybe you won't realize it today or maybe tomorrow, but I promise you, and this is a guarantee, I guarantee to you that once you will realize it, that trading is a damned human part. Because as we mentioned previously, most traders use a certain number of percent. As I told you, the 1% rule. But based on my experience, this percent is not the most important thing. Why? It's completely uninteresting. The percent number says nothing. The crucial point is the amounts of money beyond that percent. Why? You are human. You are a man. You are a woman. You have your wishes. You have your dreams. You have your illusions in trading. You have your goals, what you want to reach with trading. You never think in percents. Come on, be honest to me. You are human. You're used to think in dollars. You're used to think in euros. You're used to think in pounds or more that we can lose or win. And we never think, or really seldom, we think in percentages. Come on, let's be completely frankly to each other. If you lose money on your account and you lost maybe 50 euros or maybe 100 euros, and you have a look at your account size, it's a real account, not demo account, real account. What do you think? Really deep in your minds, you used to think, oh my God, what I could bought for that money. Now I lost 100 euros for what? For what? For nothing. And I cannot understand why. With 100 euro here in Germany, you can feed your family the whole week or maybe 2 weeks. Or if you live in wherever you are, $100 is a huge amount of money. And if I'm talking about Africa or Asia, with $100 you can feed your kiddies, your family, maybe for 1 month. So what is more important? Them at reading correct candles or your kiddies or your family? What is more important for you? And now, if you win $100, you sit on your desk and then you're going to think, oh, what can I buy for 100 euros? Oh my God, I want to do it again. Am I right? Come on, be honest to me. I know I am right because we are humans. Maybe, I can compare it. Maybe you lost your money on the street. Maybe you lose your pocket. Are you at home and do you think, oh, I lost 10% of my monthly income right now. Where is my pocket? No, damn it, of course not. You think, oh my God, I lost 100 euros on the street. You never think in percentages. You think in money. And this is the kind of emotion part in trading. Why you must think in money and not in this percentage. You can risk maybe 10% if you want. It's the crucial point how much money is beyond that 10%. And you must think in that amount and not in this risk management. It's completely uninteresting, this 1% rule. It's stupid. It's not kind of risk management. It's the theory in trading. But we are humans. We are in a practical way on the way in trading. So you must think in money. How can you do that? How can you cope this challenge? Go on. I love this picture. I love these animals. I love my penguins. So in my opinion, the percentage doesn't matter as long as you remain within your personal financial comfort zone. And regarding risk appetite, and money management, you must ask yourself about your penguin factor. So what is the penguin factor? The penguin factor means where you feel really comfortable and where you can play out your strength and where you can stick to the rules and under all circumstances. Why I choose this penguin factors? Look at this small penguin factor here. He looks so cute. He looks awesome. I want to take it in my arms. I want to hug this beautiful animal here right now. But you can see it's in danger because he has a big body, no neck, a head, feet. So a little bit like me, you know, no neck, body and head and feet. So it's a little bit like me. So, but it's in danger because he's on the beach right now. He cannot walk very fast. He cannot fly. He can do only a little bit walking on the beach. He's in danger. He's very vulnerable outside of the water. But did you ever saw a penguin in the water? If a penguin is in the water, he's almost without animals. A penguin has two animals, the humans, the people, and sharks. That's the two animals a penguin has most of the times. He's quick, he can moving very fast in the water, he's really fast in the water. And in the water, a penguin can play out the strength. But as a penguin outside of the water, he's very vulnerable outside of the water. So, what's about you? Where can you play out your strength? Where can you be without any enemies outside? Where? If you are in your comfort zone or if you are outside of your comfort zone? Where are you vulnerable? Inside or outside? This is not depending on the damage percentage. It's about money. The penguin factor is definitely different for each trader around the world because $100 has a different value for each of us. $100 for me means a lot of money. I can feed myself for at least 2 weeks. $100 in an African style, or in Africa or in Asia, means almost feeding family for 1 month or even longer. If you ask a rich guy, really rich guy, he says, $100, I give it to the waiter if I'm in the restaurant. Fuck, whatever. You see, $100 has different value for each of us. What does this mean for your own trading right now? Before you think about a certain percentage, you need to know your own penguin factor in real money. What is your own penguin factor in real money? What is it? How much money can you risk before you start to get nervous, nervous and wet hands and intervene in your trade incorrectly? Meaning you stop following your plan. This point is not your real penguin factor. How can you figure out your own penguin factor? Let me give you an example. I don't know, maybe you're sitting at home right now. Open your pocket, take money out of it, whatever, go out to the street and give it to anyone else. Right now. Do it. Take some money out of your pocket, go out of the street, out of your home, out of your flat, go out to the street and give it to anyone else. How much money would you take out of your pocket? $100? $50, 10 euro? How much? How much money would you give to anyone else? This is your penguin factor. But now we must talk about another pitfall. Most of new traders used to step in. Once you think you have found your real penguin factor, take money out of your pocket, go out and give it to someone else. Maybe you found one of these amounts. There is a big pitfall because you assume that after a loss, the next winner trade must come. But that's a big failure. It's a big mistake because trading is a game of probabilities. And with every new trade, you start on the right side of the chart again, and you cannot know what will happen next. Maybe you say 50 euros are my penguin factor. Now you have a loss, 50 euros, but you cannot know what will happen next. Your trading strategy comes up, your signal come up, you are on the right side of the chart. How can you know if you will have a winner right now? How can you know that? There is no guarantee. Maybe you will have a loser again. Think about it. That's a crucial point in trading, guys. It's one of the things why so many people failed in trading. In every trading strategy, even the most solid one, even our trend trading strategy, you must accept the drawdown phases, which mean there is a certain number of lost trades in a row. And if I use my trading strategy, it's normal sometimes to have 4 or 5 trades in a row as losses. Therefore, it is possible that 4 or 5 trades in a row will be losing trades. Can you cope that challenge? Maybe you thought you figure out your penguin factor is 50 euros, but now you have 5 losers in a row, which means you lose 250 euros. Think about it. Would you take out from your pocket 250 euros? Would you go out to the street and would you give it to anyone else? Be honest, would you do that with 250 euros? Think about it. And if you wouldn't do that in that way, then is 50 euros surely not your real penguin factor. You have to cut it. And then figure out if you have 5 losses in a row, this is the money. This is your real penguin factor. This is the amount you have to figure out. It's based on my experience. And this is one of the reasons. Look at the bottom of this slide. 79% of traders lose money. I don't want that you lose money anymore. Please listen to me. Does this the real question should be asked? Is this still your amount? Is this amount still your penguin factor? And now the final question is, are you able to stick to the rules after the 5th loss in a row? And can you follow your plan if once the trade is running, after you had 5 losses in a row and maybe you lost 250 euros? If you can follow if you can stick to the rules and if you can't follow your plan, if not, you have to figure out your real penguin factor. And this is depending from you as a human part. This is the human part. It's not a strategy. It's the human part. So there's a question from Baram. When can I ask you about your opinion about the trade idea according to your... please ask me about in the Trading Spotlight community. There you can ask me. You know, we have a Trading Spotlight community. At the end of the webinar, I will show you a link of that. So if you are not able to stick to your trading style or plan after a specific number of losses, you must reduce the amounts You thought it would be your penguin factor, maybe 50 euros. Based on that fact, the trading is a pure game of math. You must be able to take every new signal, even after some losses, because you cannot know if the next trade might be the next big winner. And come on, be honest. How often does it happen that we choose one trade and it is a loser, and we choose the next one, it's a loser, and the third time we said, no, I avoid to make this signal, I don't trade this one. And then you have a look at this couple of hours later and you could see, oh damn it, this would be the big winner. You see, game of math. You must be sure, you must be able to take every signal, because it's a game of probabilities. And to do so, you must reduce the amount of your penguin factor. This is the only way to become successful in trading on a long run. And now, once you realize this, maybe 50 euro, it's not. Maybe you said, okay, to be honest, maybe it's 10 euro. Okay, I agree with you. But then you realize that your profits will decrease as well. Here we go. Welcome in real trading world. And this is one of the inevitable things you must accept if you want to become successful in trading. As long as you have profitable trading strategy and style, and as long as you're willing and able to stick to rules, your account will increase on a long run. And if your account grows, your risk will increase automatically, because 1% of $1,500 is so much more than 1% of $1,000. Think it through. You don't have to increase the percent. It's increased automatically. And at the end, you see, that's a human factor in trading. Let's make a quick conclusion. A proper risk and money management approach is the foundation of all successful trading. Different trading styles require different risk tolerances: scalping, day trading, swing trading. And here we go. The importance of assigning a maximum percentage to your risk is overestimated, because the amounts beyond percentage is so much more important. And if you want to become successful in trading, you must figure out your own real penguin factor. And this is the human part. We'll never let you behind. After our webinars, it's for Baram, for example, get support after our webinars when you most need it. Open a real account at Admiral Markets, of course. Register with Traders Yard. It's tradersyard.com. And then we have our own trading spotlight community. There you can reach Jens, Paul, and myself. There you can follow our trades. I make almost a daily video for you that you can see my market opinion and the running trades. And you can ask me whatever you want. Maybe a trading idea from Baram, of course. There you can reach me. And then please don't forget, on Friday, same time, same place, my wonderful and congenious partner, we're talking about range bar trading strategy, including what is a range bar, the benefits of range bars, and what are the best range bars. Friday, 2 p.m. No, 3 p.m. Through 2 p.m. Of course, 12th of June. And please give your attention and your lifetime, Jens, as well. He deserves all your attention. Guys, I have to say so much thank you. Thank you for your lifetime you shared with me right now. I hope I was able to give you a little bit ideas for your own, for your trading success. And maybe if you want to have more information, follow Admiral Markets in YouTube and something else, and or contact us wherever you want. And this, yes, I can say I'm really grateful that you attend this webinar, and I hope you learned a little bit. I say thank you to TG, my host for this webinar. And yes, I wish you all the best, and I hope we see each other next Wednesday for the next topic. And with this in our mind, be careful about your thoughts. You know, they are the beginning of your actions. See you. Bye-bye.